All right, hey guys, Brad here. We are going to take a look at the usual suspects through the lens of Elliott wave theory. We're going to look at crude oil, the metals, dollar, Nasdaq, maybe a couple other things. I'm going to keep it moving and I'm just going to try to give you the higher level parameters. By the way, just a general announcement. I'm very nearly finalizing my setup and schedule for some educational sessions that'll be available to all you folks that are inside of the Professor Trades Club who want to learn more about Elliott Wave. I've settled on Saturday mornings, East Coast Standard Time, New York time. More about that later. I'll be announcing it inside of the club just as soon as I finish a few last remaining technical things. So I want it to be a real smooth transition, a way for you guys to register, sign up, and be present to join me on these Saturday sessions. I've got 5 topics, 5 areas of interest set up, and so I'll be doing them every Saturday for 5 Saturdays. I just haven't decided exactly when to kick it off. But hey, if you're interested in that, do me a favor. Drop the number 5 in the comment section of this video, just so I can get a loose idea of how many people might be interested right off the break. If you're not in the Professor Trades Club, you're not going to be able to get onto these sessions just yet. Of course, you can always join the Professor Trades Club. The link to that is in the description of this video as well. All right, let's dive in to the crude oil chart for starters. Had some great action on Friday to the downside. You can see we had this floor and this ceiling, and price has just been basically going back and forth. I mean, it's a massive range, but that's what it's been doing. $4 range, $3 or $4 range. And so what happened on Friday is this came back down. We've had a short bias for some time in crude oil inside of the club. So now what I'm interested in giving you is some parameters. Well, you can see on this 4-hour chart, the idea is we're making lower highs, and we've got this is a lower low, and we are looks like about to break that if we didn't already. Yeah, so we are right there. So what's interesting about this now, what I'm looking for this week, let me give you some parameters. If it catches support right here, which it certainly could, but the next level down, which I think is, if it breaks this current level and makes it down here, I will be looking for a bounce to form, if not from where we are currently. Like for example, let's say it gaps down and then drifts a little lower into this zone. I'll be looking to long that if I happen to be on screen at the time, which I may or may not be. But if I am, I'll be looking for longs down here. And the idea would be, upon any bounce, it really should be contained by this blue box, including even shy of that. It really depends. So what we have to do is wait now to see what is going to happen next. And one of the parameters that I like is if this blue box got breached and price came directly all the way back up to that area, I think it's more likely that it keeps going higher. Otherwise, what I'd be expecting after a bounce is a continuation lower, especially if it comes up correctively. And if you're an Elliott wave person or getting familiar with Elliott wave, you know that if it's going to come up correctively, it's got to be in some configuration of a 3-wave move. So those are clues that we'll be looking for. So I'm looking for a bounce. I don't know where it's going to bounce from, but I'm going to look for the structure of that bounce. If it's coming up in 3s, meaning it makes like one kind of move up to here and then gets rejected and then comes up again, that would be 3 waves. So if it can come up into this blue area and terminate, meaning get rejected, and if that comes up in 3-wave structure, then I will be looking for shorts again. That's really the deal. And then looking for targets, I think a minimum target would be 69, but I think it's more likely to get down here on under 69 into the 68s. And if actually, let me just hop over here. Check this out on the daily, or rather 8-hour chart. These yellow fibs are always going to be me tracking a 3-wave structure. So that's these yellow fibs here. But what's interesting, and now take this thought, right? These yellow fibs targeting 68.70 or dipping even below 68.70, anywhere in the mid to low 68s if it wants to exceed it. Now, to put that in context, wave C should be composed very often of 5 waves. So even though we are looking at a 3-wave structure on these longer, let me label this so you can understand what I'm saying. So what I'm saying, this made a new low right there, and then it bounced like crazy, and then now it's coming all the way back down like crazy. So a 3-wave structure, I'm always using these yellow fibs, anywhere from the 100 fib to the 1236 fib to the 1382 fib. So I've got it coming up in 3 waves. This whole thing is moving in 3s. And then if I look for a 3-wave structure, here it is, A, B, C. So the way you extrapolate that is you're using the fib measurement tool, the fib projection tool, and I'm always looking for the 100 fib, the 1236, and the 1382 for reasonable targets if it's moving in 3s. But guess what? Wave C is a great majority of the time structured in 5 waves. So then when we drop down to the lower time frame, if this is a 1, 2, and this is wave 3, but this is what I'm saying, it's a little shy of an ideal target for wave 3, although it certainly could terminate at the 138, this white 1382 for wave 3, but a more logical target is to come down to this 1618 for wave 3. Now I'm going to label these real quick for you. This is the idea. 1, 2, 3, 4, 5. So even though it's coming down in 5 waves, we're looking at it as a C wave. So it's not like like that could be the termination point of this next move down. Sorry, I'm just trying to put on something resembling the correct degree for these for the purple count, as we say. So I'm going to actually change the fibs to make them purple so they match. These purple fibs match the purple labels. But that's the idea. So we already got 3 down, looking for a bounce. These are your parameters. You can stop the tape and watch these, write these down. You don't want to see it bounce much above 71.45. I'm not predicting that. I'm just saying this is the zone. And really, we can dial in with a little more exactitude once we get some price action in here to measure. Then we can do the projections. Okay, so that's crude oil. Moving on, I don't have a big edge in gold, but I will just tell you, I've been saying for a long time, I just didn't like this as being all of wave 4. Then it comes up and it comes back down again and does not make a lower low. Trying to get rid of some of these bubbles. It's too noisy for me just to be looking at price action. So the idea is, it made a higher low, and actually finally over here it made a higher high. So you do have a higher low down here, and you do have a higher high here, but the structure of price to me is it's problematic. But price is king, so I'm not going to argue with it. This kind of a janky structure, in any way that you can possibly look at it, it's not abundantly clear to me. I've been trying to count this, looking for 5 up, but it's just not ideal. And then, I kind of forced, meaning just, look, you got to make some decision. So I was counting this as 5 up, and I could have argued it all the way up to here that it was okay, but then this move down wasn't ideal, although it certainly qualified as a wave 4. But guess what? Then it made a new high and then totally petered out and made 2 lower lows and broke this level. So it's just starting to get a little ridiculous. So when it starts to overlap itself, look at this whole region. It's just overlapping itself very clearly. It made a higher high, but guess what? Now it made a lower low. So it's kind of like range expansion. Well, if it's still in some kind of range expansion, that doesn't bode well. That doesn't provide a lot of clarity. What I mean by range expansion is it made a higher high and it made a lower low. and it didn't do so where I was looking for it to do so. It came over here and basically wrecked this count that I had. So when that happens, I defer back to the higher time frame. So I've been saying for weeks, I don't think wave 4 is done. You know, I started questioning that here, but this had every chance to continue to the upside and come up with something more convincing as a five-wave structure, and then it failed. So gold, man, what are you doing? And then when I really look at the dollar, the DXY, which we're going to get to in a second, there's very similar ambiguity on that chart. So then things start making sense. I mean, I don't want to correlate too much, but the dollar and metals, yeah, they're kind of loosely correlated on a high enough time frame. I don't like to correlate them on anything low time frame. I mean, this is a 1 hour chart, but the overall level of ambiguity, I will point to that and suggest that whichever chart produces clarity, whether it be the dollar or the metals, I think they're going to sync up eventually. But we'll get to that in a second. So my thoughts on gold is I don't have an edge. I'm not really clear. This thing is chopping in a range. I think the clearest thing I could think of is if this can't make a new high and just get something more sustainable coming up here, then my bias is going to have to be to this downside. And then now we're going to move to silver, and sometimes silver leads, sometimes gold leads. Gold has been behaving very well along Fibonacci ratios, Fibonacci lines, all the way to this top, and then is when it started getting weird, which is another thing. Weird meaning inconsistent, overlapping, and breaking structure. Well, that to me supports the idea of this still being in a wave 4 of whatever degree. So now look, I just popped out to the daily on the continuous because I just wanted to show you this count on the daily. So, you know, this is very reasonable that we're going to come down lower in this degree wave 4 before we finally get the final shove up, which I'm going to move all this stuff further over to the right because this is going to take more time if this comes down. I think, realistically, that's the end of March. So how surprised would you be if gold and metals take a 30-day hiatus from all this bullish action and get a pullback in a wave 4? Possible. That's why I wanted to show you this daily chart. Okay, so it's a little ambiguous because of all this overlap. And yeah, it made a new high, but it had no traction. Look at that massive rejection. This was a pivot zone, which gave it a chance to be bullish, but it totally failed the pivot and then couldn't even come close to getting back above it. And it's making 2 lower lows. Now look, this is the last high, so that's what's important. So just keeping it super duper simple. If you're already in a short, you stay in it, and you don't want to see price come back above that last high. Just, what is that? Just call it 29.60. And if this thing continues to come down, I think it's more realistic to imagine it coming down and getting into this air pocket. Look at all this empty space below structure here and making it, if that's the case, I think this is reasonable for it to come down to 2,900, but really the lower targets are much lower than that. So I don't have much of an edge. Let's look at silver. Massive, wonderful short. If you're in the room, the Professor Trades Club, by the way, the link is in the description of this video. I was posting looking for the short, and I got extremely lucky. I feel very fortunate to have caught a juicy short, and I still have a short position on. Look where this came to, 1618. Do I trust it? No. There are 2 different ways to measure this. I'm not going to get caught up or bogged down. I'll just say, similar to gold, there is a bit of an air pocket below this structural point right here. So if this would be a great place for a bounce somewhere in this area early in the week. Be a great place for a bounce, and then come back and back test this zone, and then finish off by coming down, guess what, to the next 1618. When I can't decide exactly how to measure it, I measure it whichever ways I can see to measure it. In this case, there are 2 predominant ways to measure this. Neither are ideal or particularly clean. But I just got extremely fortunate because using this poor man's Darvis box idea. See this orange box on my chart? If you get below, you put a price around range and divide it in half. If price gets above the 50% level of that range, then I'm going to have a bias to the upside. If it cannot and makes lower lows, and I'm going to keep shorting it against that level. So that's what I did. And over here, I got extremely fortunate because I had added back some of the shorts I had taken off with a stop above this zone. And look what happened. Bam. So wonderful. Caught a beautiful short. So I still have a smaller size position short on after taking gains along the way down. So we'll see. But anyway, the white fibs, this is an area I would expect it to bounce from. And it's the degree of that bounce. It's how strong that bounce is going to help me discern which of these set of ratios are in play, because I'm not really sure. But my bias is to the short side, even though I'm expecting a bounce in silver. Okay, let's look at the dollar right now. This is the ambiguity I was talking about. This had every chance to hold this support and come up, and it did. It started to. Then it failed and completely failed and got below the support. Now it's back testing it. So what I would think is logical, either it's just going to keep coming up from here, or it's going to come down and just get into this zone, one more shove down, which would perhaps coincide with metals bouncing higher. And then this is where the next bounce could form for, if this is just 3 down into this support, because the risk is for the dollar and metals is that if this high that we're tracking on the weekly chart, if that's good or not, is that good or not? Well, the number one way using Elliott wave that we discern if the top really is in and a lasting trend change has occurred is we need to see 5 waves down from that last high. And what I'm showing you here is 1, 2, and this is still 3. So in other words, it hasn't created 5 waves down. It's created 3 waves down, and sort of an incomplete 3 waves down at that. So to really confirm that the top is in, I'd want to see this keep coming down, bounce, sure, from this area, but not come back above this area and then get down here at least to 105, but more ideally come down and break 105. And wouldn't that be great? If you come down here and tag this 1618, that's going to go a long ways, even though it won't totally confirm the top is in, but that'll go a long ways towards confirming it. Then we'll track the bounce. And at that point, the bounce should absolutely not come above this area here. But now I'm getting ahead of myself. So this is the range of the dollar. And this is what I wanted to show you. The ambiguity right in here is also similar to the ambiguity in metals. Lack of clarity, could go up, could go down, not ideal. So like, if I took a chance with silver and I got paid. So sometimes you do that, take a chance, but I had parameters and I defined my risk. So it's not like gambling. It's very clear. I was very well aware of the risk. So that's the deal with the dollar. Sorry, not exactly conclusive. Now the yen, the JPYX, this is much clearer. I haven't changed my parameters at all, or the view. And, I change it when the price action forces me to change it. But for right now, this is what we had as support, and this is what we had as the bottom. This is what we had as the top of a wave 4. All of those things appear to be following through, and including right now, because this is the support. It made a higher low, and now it's made a higher high. So you got a high, then you got a low, a test into support, reasonable where you'd think of a wave 2 between this 618 and 764, and it should come down in 3 waves, which it did, as evidenced by the fact that I'm using yellow fibs that are the 100 fib, the 1236, and the 1382. I'm like a broken record. I speak why, but because I'm measuring the same things over and over again, it doesn't matter what instrument it is. When I'm looking for 3 waves, I'm looking for the yellow fibs. That's what we got. Look at the reaction that we got off of those yellow fibs. So obviously, the next test at hand is to get above this area right here, and the ultimate target is way up here for the yen. Is it possible? Of course, yes, it is. Am I predicting that? No. We're just going to let price dictate to us. Okay, but that's the kind of price action in JPY that has the UJ looking really good. And the biggest currency trade that I have on is the GJ. And this, look, I added back. I've played around with this, but mostly I haven't touched it much, other than I took some off and I added it back. and I'm still short. So now I have a slightly larger position than I had before, and I'm up crazy. But the idea is, if this structure is going to play out as I've got it drawn up, this is the A, B, and it's going to come down lower. Let me. Right. So this is zoomed out a bit more. So you can see the structure a little more clearly on that weekly. So we're yeah, the impulse would be this as a 1-2. Can you imagine this? If it's impulsive, it's going to come all the way down to here. What's that? 154. Yeah, that's crazy. So there's no way I'll be in the trade until then. The way I'm thinking of this now is as this wave 4. So I'm going to keep it really simple and just keep watching the JPY and keep looking at this trade. And the next level of support is going to be way down here. So if it makes it back to the 382, I mean, that's a fantastic place to take at least half of the position off. If you see it get to the 382, I think that makes sense. At some point, I'll dial in the lower degree stuff on the GJ. I've been in that trade for so long, it's just kind of cruise control. I don't really measure the nano stuff. I just keep my eye on these longer, larger time frames. And as long as it looks like it's coming down towards sort of, I mean, this is 171 even is a target that's very far away, but completely reasonable based on this structure. Very reasonable. But you got to be careful. The hardest thing is getting a right entry, but once you got the right entry, it's a little easier just to do trade management. Okay, cool. So Nasdaq, let's do this last. Look at this massive move. Now here, I'm going to keep it real simple too. If this holds support somewhere right in this area, the clue is going to be, can it get through this blue zone? If it cannot get through this blue zone and gets rejected and come down and makes another low somewhere down in here, which we'll look at on the lower time frame in a second, that's a humongous warning to bulls. Otherwise, believe it or not, this is still bullish. I mean, just look, forget Elliott wave, forget technicals, forget everything. Just look at this. Here's a low. Here's a high. Here is a higher low. This low did not make a new high. Here is a higher low. This high was kind of, call it a double top. So, technically, is it a higher high? I think it did make a higher high. 968. Let me see what this one is. Yeah, so it made a higher high. So you have to be real. A higher high counts, especially in LA wave. Every penny is meaningful when it comes to the relationship between price and Fibonacci. That's why I use a magnet and get it to the penny. But so look, higher high. Here's a high. Here's a higher low. Not a higher high, but here's a higher low. There's a point that I'm doing. There's a reason I'm putting these little circles on here, just to get your brain acclimated. It's a higher low. Here's a higher high. Higher low. I mean, this is such a simple type clue that I'm surprised more people don't mention it. I do hear the professor, Armando, mentioning that often in his videos. So now, I'm expecting this to be another higher low, which means it could come down a little more, sure, but you do not want to see it create another lower low, below 21,510. Okay, so the floor and the ceiling are right here, looking you in the face. Here's the ceiling, 21,951, and here's the floor, 21,510. So the idea is this catches support and then keeps coming, gets through the blue box, gets through 21,951, and it's going to come up impulsively. That's the idea. And let's go down one more time level. What is this? Lower time frame. Okay, here's what I was talking about. So look at this. 1618 is right there, right here, right now. So wouldn't it be great if this catches support right in here? I actually longed it 2 times on Friday, stayed small, knowing that I'm catching a falling knife. Look, I'm not delusional. I went long. I've done this before in Nasdaq and took some verbal heat from people. mostly in another club that I'm in besides Professor Trades Club. And, I stopped out of that particular trade. But the key is, how can I do that and not freak out or care? Well, it's because I'm sized correctly. If you're sized correctly, you can layer into longs. And if it goes against you, as long as you have some kind of idea and methodology of what the hell you're doing, you don't freak out when you take heat. Do I want to take heat? Of course not. But if I trade with the assumption that I'm going to take heat, it'll help me to size properly. Facts. Because you can only afford to be wrong. If you're too heavy, your life, like the video games where it has your life strength, your life force is being counted at all times, and it's like a bar graph going up and down, your life force. Well, that's the way your capital is. If you're trading too big, you're going to kill your life force before you have a chance to be successful. So you trade small and trade the structure. Because I trade structure, it requires that I stay small enough to do so. So in any case, I want to see this bounce from here. And if it gets caught up in here and gets rejected and starts coming down impulsively, then we'll know that this is more likely a lasting top. But what I'm looking for is that this catches support here somewhere in this general area, bounces and does not come back down into this area until after which it has made it all the way up to at least 22.5, at least 22. Well, maybe I don't need to be that bullish. It needs to make a new high. Let's just leave it simple. But 22,575 is a perfectly good fib. So we'll do better once we get more price action. But anyway, that's the deal with the Nasdaq. So have I missed anything? As a bonus, let me show you Bitcoin real quick. Big deal. I think it's a wave 4. It's overlapping. It's acting like a wave 4. It's going net zero. It's going nowhere. It's going net. There's no new net gains. There's no new net loss. It expanded this range, and then now it's chopping within that range. The overall idea is this blue area is the wave 4 zone. So could it come back down and get deeper into these yellow fibs? Absolutely. In fact, that's what I was expecting it to do over here. So if it does come back down and make a new low, I'm just going to move over the wave 4 label. And the idea is, if this blue box holds, you have two ideas that it could be. It could come up to the top of this box, just call it 130. That's one idea. And the other idea is it really extends and comes all the way up here, just call it 143. So we're going to know once this bottoms and starts building a fresh new impulse, then I'll be able to take some measurements and project up into this area and try to discern, is it more likely that it tops in this area or this area? Okay, so now that I've talked about how I think it could be bullish, let's talk about bearish. Well, it's right here on my chart. If you lose this blue zone and it starts coming down impulsively and breaks this level, see, these words on here is what I really mean. Caution. If it gets below the blue zone, it's caution. If it gets below this level, just call it 68,000. Humongous warning to bulls. Humongous warning. And then the final straw is it has to hold this support. If it loses this support, good God, I don't even want to talk about that. So those are the big important parameters. So what I'm going to be watching basically is the blue box, and in particular at the moment this zone. So just look at the last low, wherever that last swing low is. You don't want to see it come down and get into this red box again, although it sure does look like that's what it's going to do. And honestly, I'd feel more confident about this structure if it came down further and to at least the 1236 fib and caught some support down in here, and then just started having a reaction like this reaction here was nice, but coming deeper and seeing a nice reaction like that, that would go a long way for the bulls. But it has to come lower first. Otherwise, it's just sort of chopping in a range. All right, one last bonus. This not to scare you, but the idea is just pause your video and read these words up here and read about Elliott wave, because it's a very old methodology. The guy that created it was actually projecting things from back in the 20s and the 30s and the 40s. And these are his projected targets here, and we're up here now. So I know that sounds crazy. This is 2025, and I've got stuff on my chart from 1929, 1945, 1949, and then of course COVID. These are the major lows that these, all of these highs are projected from these lows. And we're here. And every time you have a massive red candle like that, the tendency is to go, oh my God, the top is in, the top is in. But no, we need more evidence to know if the top is in. But the point is, this is where we are sort of hunting around for a top. So if this ain't it, come up to 62, 63, or all the way up and get above 6,400. But at some point, this thing is going to top out. The expectation, according to Elliott Wave and the S&P, is that at some point, sooner rather than later, this thing is going to top out. And look at this written in red, the wave 4, because we were at the top of this wave 3, and these are all the internal wave tops that are all going to be topping at the same time. So 1, 2, 3, 4, 5, 6 degrees, all lining up and topping at the same time. That is what will give you a 10 to 12 to 14 year correction. I'm not going to say much more about that. Okay, looking at this one, I tracked this for one of our Indian friends inside the Professor Trades Club, and then I kind of forgot about the chart, and I only charted it on the 8-hour. And man, looking back at this chart, I kind of like nailed the top. And the funny thing is, I wasn't sure if it was this projection in purple or this one in green, and it came literally to exactly the top of the green one and got rejected and never looked back. So I think this is where this is the future of the S&P, perhaps, because this looks like a lasting top. This is coming down. Here's the pivot. If it continues to get below here, what I'd love to see is it come down. Now, I'm not trading this, but I'm just presenting this. Any of our Indian friends might benefit from this, of the Nifty 50. The idea is it comes all the way down and eventually gets down here to the 20,300 level. Then get contained. Certainly don't get back above this pivot. If it makes it all the way down there, it cannot come back above this pivot before making a newer low, which should get down here to at least 19,300 at a minimum, probably lower than that. So that's my Nifty 50. Was there any other bonus I want to give you? Nope. I think that pretty much covered it. Cool. All right. Thanks a lot for watching, guys. If you are not yet subscribed to the channel, please give me a like. Go ahead and subscribe so you'll be notified. But mainly, if you really want to get the value, I'm posting this stuff all during the week inside the Professor Trades Club. The link is in the video description. I highly recommend it. You can get the club, and for a few bucks, well, not even, just a few bucks more a month, you can get all the Elliott Wave stuff in addition to the Professor Trades stuff. So check out the link, check out the club, come join us. Also, don't forget, if you want educational every Saturday, please drop me the number 5 in a comment below. I'm just trying to gauge the interest of who wants to get these educational sessions every Saturday. At least 5 sessions lined up in terms of topics and curriculum. I've got 5 sessions I think are a great place to start, so you guys can start understanding how to read Elliott Wave chart and also understand how to start creating your own. Cool. All right. Thanks a lot for watching, guys. Catch you inside of the Professor Trades Club. Bye-bye.